Hey traders, Raghi here, and in this video we are going to take a dive into a day trade that I took today in the Dow futures, the YM symbol. So the YM is the mini, right? Now, while I'm talking about this, keep in mind that this trade is something you can do in the micro Dow YM, the YM itself, of course, which is known as the mini, or the options on the DIA. So this is sort of the choose your own adventure part of what I do, and yet the setup that we're going to talk through is one that you could take in any one of those, or even a combination. All right, so with that being said, how did this start? Well, we continue to have directional bias that's bullish in the Dow, which means I'm looking at the long side and the long side only. So the bell rings, and I'm focused on where there's going to be support. And we sold off to aggro support at 30,030. This was an alert that I sent out to traders. So now they're ready to take advantage of this trade from this level at 30,030. That initially gets us in. Now there are a couple levels below, but we never got there. So the 30,030 is the level that we initially take a position from, and it's going to be a smaller position than if we had got deeper into the range. So think about micros, think about options, things of that nature. All right, next is what did we do once 30,030 hit? Again, micros can trigger long, mini can trigger long, or you can get the DIA long call. So the first target that we were focused on as this Dow continued to climb was 30,050 or 30,075. And one of the things that I told traders is because we got in at 30,030, I'm not really interested in a 20-point upside, although for some traders I'll let them know it's there, but we were really interested in the 30,075 upside. So at that point, and I'm going to show you here how this works, at that point, what we're talking about per contract of the mini Dow, so we get in at 30,045, the target was 30,075, so it's a 30 point times 5, it's $150 per contract for the day trade. All right, well that's pretty good. It's a good start to the day. Then we said, all right, the market's continuing to go in our favor. We did a couple important things. Paid ourselves, we moved to a protective stop. All right, so then we start saying, all right, now we're really going to go for it. What's the next target? So remember, now we're still looking at 30,030 as the entry, but now we're looking at 30,150 second target. So now we're talking about 120 points at $5 a point per contract. So now we're really talking. Now we've had a $600 trade per contract on top of that previous 150. So now we're talking $750 per contract. So the last thing we're going to do is put in a trailing stop. That means the remainder of the position is also going to be exited at a gain, at a win. And that way we know no matter what happens the remainder of the day, we walk out with at least $750 per contract or more in this Dow. Okay, and this is exactly what we did across the Dow and the S&P and the Russell. So you look at now getting to scale that out across the 4 indices, NASDAQ, Dow, S&P, and Russell, and you start to put together a really comprehensive plan for how to take advantage of this directional bias that remains bullish in the broader averages. All right, that's today's video. I'll see you in the next update.